Hello and welcome to News Centre. I'm Parikshit Luthra and here are the headlines we're tracking this evening. Stock markets wobble across the world after minutes of the US Federal Reserve meeting signal further rate hikes. Sensex down nearly 400 points. Nifty loses 100 points. Mid-caps buck the trend and the index ends in the green. US 10-year bond yield moves closer to its highest level in 15 years as rate hike fears loom. Bond yields in India hit a 4-month high. The rupee weakens against the dollar, ending at a record closing low. Shares of Adani Power perk up after GQG makes a $1 billion bet. With the latest investment, GQG's exposure to the Adani Group is now about $4 billion. Bata India and Adidas are likely to join hands. Sources say both companies are in advanced stages of talks to seal a strategic partnership. That's a CNBC-TV18 exclusive.
We've right now put Ukraine on a back burner. That's not an issue of importance as far as development and growth is concerned.
Less than 20 days to go for world leaders to arrive in Delhi. G20 Sherpa Amitabh Kant says Ukraine issue is on the back burner and the focus will be on developmental issues and technological transformation. Calls for a global alliance to develop a governance framework for digital public infrastructure. That's an exclusive. In a bid to curb cyber frauds, government imposes restriction on sale of bulk SIM cards. Bulk sale will be allowed only through business connections. IT Minister Ashwini Vaishnav announces stricter verification and registration process. Over 80 people are dead in Himachal Pradesh and Uttarakhand over the last 4 days as rains and landslides wreak havoc. The Chief Minister of Himachal Pradesh blames rampant unscientific construction as the state faces a loss of more than 10,000 crore rupees. India's moon mission Chandrayaan-3 enters the final phase. The moon lander called Vikram detaches from the spacecraft, which will now continue its solo journey to the moon and is scheduled to make a soft landing on the 23rd of August. The Advertising Standards Council of India revises the guidelines to place additional responsibility on finance and health influencers. Says financial influencers can offer investment advice only if they are registered with market regulator SEBI. Over 80 people are dead in Himachal Pradesh and Uttarakhand over the last 4 days as rains and landslides wreak havoc. The Chief Minister of Himachal Pradesh, Sukhwinder Singh Sukhu, has blamed rampant unscientific construction as the state faces a loss of more than 10,000 crore rupees. Network 18's Yash Goel is here with the latest.
This is the Zukain Panchayat area which has been worst affected by the flash floods which occurred and washed away many homes. This is the trail of destruction which has left behind now, and this in particular happened on the morning of 13th of August when a cloudburst took place on the upper hill area, and after that the water gushed in with so much speed that it washed away whatever it had in its way. Still, there is a lot of damage which is still here, and this entire panchayat has been vacated, and in fact now this is the red zone area. No one from outside is actually allowed to enter this space. There were 2 homes which were seriously affected by this very flash flood which occurred on the 13th of August. Now, this was the very home which was in the passageway of this entire flash flood, and you can see how bad situation is. Today is the 3rd day, and still there are a lot of stones which are present inside, there are a lot of mud which is present inside, and these are all locals and the family members who are actually helping each other in actually carrying out this operation of emptying this space. When we spoke to the locals over here, the family who's been affected by this, they say no help has been given by the authorities as of now. No NDRF team, SDRF team, local police has came to this very spot. I would also want to take you to that side of this very area where you can see that this very home has also been affected, and in fact the locals say and the residents of this home say there are cracks in this home, and that's why this entire area has been vacated. These homes are prone as of now to probably a disaster which nobody had imagined. They say there are rains on and off, though an alert by IMD has also been issued. There are small kids who have been affected. You can see the kind of life these people are living over here. this is the saddest state of affairs, which we can tell to our viewers that how the bad situation is here in Himachal Pradesh and in particular in Mandi.
Stock markets wobbled across the world after minutes of the US Federal Reserve meeting signaled further rate hikes. A range-bound session on Dalal Street saw Nifty and Sensex end with cuts. The Sensex fell close to 400 points, while the Nifty fell 100 points to end below the 19,400 mark. Mid-caps and banks fared better than blue chips, while the mid-cap index ended 0.25% in the green. The Nifty bank ended flat with a slight negative bias. Prashant Nair is here with all the details. Prashant.
Well, finally, the market corrected. It started lower and stayed down, right? For the last 2 days, we've been getting negative global cues. US markets have been down. The market here would give an initial reaction and then spend the rest of the day in repair and would finally end flattish, right? Today, it was not to be the case. We started lower and then actually sold off more. The Nifty ending a little over 0.5% lower by close. Bank Nifty also ending down just about 0.2% lower. Mid-caps and small caps specifically came off sharply in the last 30 minutes of trade, but still much better as compared to the large cap indices. Cuts coming through in names like ITC and Reliance, responsible for about 50% of the losses on the Nifty. Power Grid, LTI Mindtree and Divi's Laboratories were some of the others. More declines as compared to advances, market breadth that is. So losers in IRFC, JSW Energy, Indian Overseas Bank, Global Spirits, there were blocks here involved as well. Religare, Dreamfolks numbers have disappointed and the stock's been down for the last 3 or 4 days now. And there was Balaji Amines, which was lower as well. Gainers and defense was a theme, and shipbuilders there specifically within the defense theme, which has done very well for the third day in a row. Cochin Shipyard up 40% in the last 3 sessions. So top gainer. There was Bata, our story there reacting very well. DB Realty, Amber Enterprises, JM Financial, Latent View, J&K Bank, Shipping Corporation of India, paper names like J&K Paper, West Coast Paper, and a name like Tribhuvan Das Zaveri for the second day running, seeing a fair bit of interest. Stability eyed in the US market. I think that will determine the near term for us as well. For the last 2 days, the S&P has corrected the most it has since April. And if the US is at the cusp of perhaps a bigger pullback, we are likely to see some consolidation, sideways price action here as well. Back to you.
All right. Thanks, Prashant, for joining us with that important update. Let's focus on bond yields, which are spiking across the world as fears over further rate hikes loom. US 10-year yield is close to its highest level since the 2008 financial crisis. In India, bond yields remain above 7.2%. The rupee weakened against the dollar to breach the 83 mark and ending at a record low. Lata Venkatesh is here with more on the money market and the impact of the US Fed minutes.
Absolutely. The rupee closed at an all-time low, as you said. And this was despite the public sector banks selling a lot of dollars, possibly on behalf of the Reserve Bank. Actually, on Independence Day, on August 15, when Indian markets were not trading, in fact, 15th and 16th, in the offshore markets, the rupee had gone as weak as 83.50, and there was some intervention by the Reserve Bank there as well. Today, it was relatively better behaved. This is entirely because of the way in which the dollar has been strengthening, as you point out, the dollar reaching to 103.5, 103.6. Just about a month ago, it was below 100 at 99. And this turnaround is largely because while the US data is coming out stronger and stronger, the comparable, a currency is always a comparison between another country. ECB is likely to have stopped its rate hikes because of the problems in Germany and even to some extent in other countries. Japan, again, export weakness, unlikely that the BOJ will do anything in terms of the yield curve control. China weakness. So weakness again in other countries is making the dollar look strong because the US data is strong, and that's working towards the rupee weakness as well. In the yield market, it's an entirely different set of factors. There is a domestic problem in terms of the July inflation number, which came at 7.44. And now the bond market in India expects that the incremental CRR, high cash reserve ratio hike, could become a slightly more permanent feature or could be spread to all deposits, or it's possible that the MPC may even contemplate, at least debate, a rate hike. So clear tightening from the Reserve Bank is expected. That's what you could see. And the other factor, of course, was the US yields now at some multi-year highs. There's a sudden fear after the Fitch downgrade and other such related events, downgrading of banks as well, a fear that the US fiscal deficit is simply too high and it's likely to remain high for a goodish bit. US debt is likely to remain high for a goodish bit, and that's why you're seeing the steepening of the curve and US longer-term yields rising, and that's having a concomitant impact on other countries' yields as well, including India. In fact, if you didn't look at just the 10-year, you looked at the swap market, then there has been a 20 basis point rise in yields.
Right. Thanks, Lata Venkatesh, for joining us. The Russian ruble has weakened against the dollar after plummeting to hit its lowest value since the start of the Ukraine war. Earlier this week, the Russian central bank stepped in and hiked interest rates to 12% to stem the slide past the 100 threshold. There has been speculation that capital controls could be reintroduced to help prop up the struggling currency. According to a Financial Times report, exporters may be forced to convert up to 80% of their foreign currency into rubles to raise demand for the currency. And Japan's exports declined 0.3% in July on an annual basis, indicating headwinds for economic recovery. This is for the first time in more than 2 years. Japan has seen a drop in exports. This was largely led by low demand for oil, chip-making equipment, and sluggish growth in China. Imports also fell for the month, slipping more than 13% annually. And without further stimulus, China is increasingly likely to miss its growth target of around 5% this year. This according to brokerage firm Nomura. The report said, and I quote, "We also see bigger downside risk to our 4.9% year-on-year growth forecast, both Q3 and Q4, and it is increasingly possible that annual GDP growth this year will miss the 5% mark," end of quote. In fact, the country suspended releases of data on youth unemployment, which had recently soared to records. Other data for July showed a broad-based slowdown worsened by the property market slump. And shares of Adani Power rallied in trade along with most group stocks. Today, this after GQG Partners invested over $1 billion into Adani Power. With this, GQG Group's exposure to Adani Group stands at about $4 billion. GQG is also investing in other Indian companies like JSW Energy and Patanjali. Nimesh Shah is here with more on GQG's India bet.
Rajiv Jain's GQG is betting big on India and now increasing the exposure beyond the Adani Group stocks as well. While the GQG's investment in Adani Group is now crossed 25,000 crore rupees in the last few weeks, the fund has also picked up significant stakes in the likes of JSW Energy as well as Patanjali Foods. Yesterday, GQG committed a massive 9,000 crores by investing close to 8% in Adani Power. They bought the stake from Adani promoters. The global fund has also acquired nearly 1.5% stake in the last 1 week in JSW Energy, investing close to 760 crores. And last month, they acquired nearly 6% stake in Patanjali Foods by putting in close to 2150 crores. They bought this in offer for sale. Now, the big bets for GQG in India are still the Adani Group stocks. Since March 2023, post the Hindenburg saga, GQG has invested across all the Adani Group companies. In Adani Green, they invested close to 4,000 crores. In Adani Enterprises, they've invested close to 5,400 crores. In Adani Ports, another 5,300 crores. And in Adani Transmission, they've invested 1,900 crores. So let's look at GQG's profile. It's one of the marquee global funds managing over $100 billion. In the international equity, they manage close to 40 billion. In global equity, they manage close to 30 billion. And in emerging markets, they manage close to 30 billion as well. Now, India stands out as the country allocation with nearly 35% exposure in the emerging market basket. Apart from the big exposure in the Adani Group stocks, the fund has also have some marquee names in India, which includes the names like ITC as well as HDFC Bank. Now, as I said, the fund is getting bigger and bigger into India. So let's see what could be the next on the radar as far as Rajiv Jain and GQG is concerned.
Onto a CNBC-TV18 exclusive now. Bata India is likely to ink a strategic deal with Adidas India. Sources have told CNBC that the anticipated partnership between the two brands is focused specifically on the India market. Vivek Iyer joins in with more details. Vivek, take us through the contours of the deal.
Well, that's right. What we understand is that there's a very interesting development that's likely underway between two large retail footwear brands. Both Bata India as well as Adidas are in talks for a strategic partnership, and this is for the Indian market operations that both of them are currently present in. Remember, Adidas is a very large player, in fact amongst the top 3 as far as the sports and athleisure brand market within the retail footwear segment is concerned. Talks, as per our sources, are said to be in the final stages, and we understand that the deal contours are currently being worked upon and are in the final stages, and an announcement is expected quite soon. We reached out to the management of Bata India. We also reached out to the management of Adidas India. At this point of time, they haven't reverted to our queries. We also understand that the main reason for this particular deal would be the fact that Adidas is actually looking to latch on to Bata's very strong retail presence. Remember, Bata has almost 2,100 stores spread across 700 cities in India, and this is a very strong network that they enjoy. And for Bata, from Bata's point of view, remember, Bata did FY23 revenues of over 3,450 crores, while Adidas at the end of FY22 had close to 1,500 crores. So it's a significant bump up as far as Bata's revenues also is concerned if they do manage to get Adidas on board. But still, important to see what are the exact deal contours in terms of whether it's an exclusive partnership or this is just a strategic tie-up in terms of shoes being available on Bata stores. Interestingly, within this particular space itself, within the retail footwear space, some interesting deals have happened in the last couple of years. In FY23, Metro Brands acquired Cravatex Brands, which actually held the exclusive long-term license for global sportswear brand, that is Fila, and the Indian sportswear brand Proline as well. So that was a recent deal that happened. And also remember, Aditya Birla Fashion and Retail in August 2022 acquired exclusive rights for selling the Reebok India brand in India. So a lot of deals have been happening in this particular space. Another interesting one is what we are given to understand from our sources.
And time for a short break, but coming up, Walmart posts a strong quarter, raises full-year forecast as online growth fuels higher sales. Details when we return. Retail giant Walmart has reported a strong quarter, beating street expectations across most parameters. The company's net profit rose by 33% to nearly $8 billion. Net sales for the company's U.S. business rose 24% annually. CNBC's Courtney Reagan brings us the details.
Reporting the earnings of $1.84 adjusted. This is 13 cents better than the street. Profit also beating, so that's a beat, which is what we saw with Target yesterday. But on revenues of $161.63 billion, that's above estimates of $160.27 billion. So that's opposite of what we heard from Target. The retailer increasing its full-year earnings guidance to $6.36 to $6.46. That's above the $6.28 street consensus. Sales guidance also increasing. Again, that's the opposite of what we heard from Target yesterday with its forecast. Walmart's U.S. comparable sales coming in up 6.4%. The street was looking for an increase of a little more than 4%. They also say that transactions and average ticket increased. Inventory down 8%. Walmart's net digital sales growing 24%, led by pickup and delivery. Walmart's ad business up 36% in the U.S. I spoke with Chief Financial Officer John David Rainey, who said the quarter was better than expected across nearly all segments. And while there was softness in general merchandise or discretionary goods, like Target also noted, I would say, it improved at Walmart. Rainey said that sales of general merchandise like electronics, home, automotive was down low single digits, but 300 basis points up from the prior quarter. Further, he said there's a little bit of a shift to cook from home with an increase in prepared meals, but also things like blenders and mixers. And when it comes to inflation, Rainey said food prices are steady, while general merchandise is an area seeing deflation compared to last year. He said private label grocery sales are up 9% for the quarter. Overall penetration of private label up 40 basis points year over year for total sales. Private label does make up about 20% of Walmart's total U.S. sales. And despite the increase in private label, Rainey said he continues to be surprised by the consumer's, quote, willingness to spend, and said, I honestly feel better than when we talked 3 months ago, adding, I would describe the consumer as choiceful or discerning. They're spending, but they're picking those moments. We're seeing strength around seasonal events, holidays, and back to school.
And French car maker Citroën is not happy with enjoying less than 1% share of the Indian passenger vehicle market. It is setting out some aggressive plans to improve volumes and increase market share. CNBC-TV18's Jude Sennett reports that the big prong in the car maker's three-pronged strategy is a stronger dealership network.
This is only the third car that Citroën will launch from its CQ platform. But when deliveries of the C3 Aircross start from October, it could roll out close to 75 dealerships. That's double the sales touchpoints Citroën has in India today.
We finished last year with 30 dealers.
We'll be 60 by September when we start taking the bookings for the C3 Across.
Right.
We'll finish the year with 75 showrooms and equivalent number of after-sales touchpoints. And by the end of next year, we're going to double all of this.
Of course, as dealerships go up, so will after-sales touchpoints. Citroën's network expansion comes at a time when the car maker is seeing an uptick in sales across India. It sold 12,000 cars in the last 12 months and launched the C3 Aircross and C5 Aircross, both of which take on bigger names in the busy mid-SUV and large SUV segments. With talking points like flexible seating and bigger boot space in these SUVs, coupled with online customization and sales, the company now wants to level up on its offering and sales experience. Online customization is Citroën's biggest consumer flex. It tried offering the experience of letting customers personalize a brand new car from start to finish and complete a sales booking in one sitting. It found out it resonated well. So the company is looking at pushing this service to augment its network expansion.
A lot of people do want to go to a dealer, right? But you have the option. Consumers have the option of doing this all online in a very immersive experience, a really seamless experience. And it was really a first for Citroën in India and something that we're spreading not only for the rest of the region, but also to the world.
Citroën hopes this will help improve on its market share in India. But the company is already set for a busy few months thanks to a steady export order book of cars for South Africa, Nepal and the ASEAN region, in addition to Latin America and Europe. In Chennai, Jude Summit.
All right, that was Jude Sanit's report on how Citroën, the French car maker, is trying to expand its India footprint. With that, it's a wrap on this edition of News Center. News continues on CNBC-TV18. Stay tuned.